market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, to talk markets, we're joined by Nataliia, Lipikhina, head of EMEA equity strategy at JPMorgan Private Bank, and Bloomberg's Justina Lee. Thank you for joining us. Happy Friday, TGIF. It's been a week and a half. When you look at some of the Chinese stimulus, I mean, it feels like, I don't know whether they're desperate, but certainly it feels like there's a lot out there. How much of a lift is this giving to European stocks?
Hi, Francine. Very nice to see you, and thanks for having me. We're definitely seeing quite a nice rally in the European market, even though we don't see a lot of upsides on the targets for the overall market. It definitely gives a boost to some of the European sectors, specifically luxuries. So we're seeing a very nice move in the luxury stocks this week, and we continue to like the sector. We think that this is a very much under-owned sector at this point. We think that valuation looks very attractive, and everyone just got very bearish on the sector. And we think that the Chinese stimulus that we have seen, monetary and fiscal, is definitely impacting the sentiment in Europe, but specifically the luxury sector.
Is there a danger, Justina, given all of this, that actually, they're stimulating the wrong side of the economy, and it smells maybe a little bit of desperation from Chinese policymakers?
I think that really is the question here. Like, for a lot of China skeptics, they're coming away from this with like two takeaways. I mean, one is that, are things actually even worse than we thought? And policymakers are getting a whiff of that. And second is, like, are they doing anything to kind of address the structural challenges of the economy and maybe kind of try to fix weak consumer demand? And if you're kind of looking at it from that angle, then maybe this bazooka is not as impressive as it looks. But I think kind of given where Chinese kind of valuations are, I mean, if you're just kind of looking at it from the perspective of an investor, you can see why Chinese stocks have been rallying these past couple of days.
Yeah, and Nataliia, it also goes back to the fact that actually valuations were quite low. So are there any industry groups apart from luxury that you like the most in Europe?
Absolutely. Industrials is one of the sectors that we're also quite positive, not just in Europe, but globally. We think it's the sector benefits from the ECB cuts, from the Fed cuts. But also, if I think structurally, there are so many themes that this sector is exposed to. Data center build-up because of AI, number one. You have energy transition. We have infrastructure, security. So many thematics that the sector is just currently exposed to. And if I'm thinking the marginal dollar is no longer going to the low-cost geographies. So we're definitely seeing a lot of nearshoring and reshoring that is positively impacting the sector. But also AI. The power consumption in the next 3 years is likely to grow 10 times. So for that, you definitely need a lot of infrastructure build-up, especially companies that are exposed to data centers. We think they are in a very sweet spot right now.
And Nataliia, are you confident that actually their fundamentals are strong enough? So we could see a lot of volatility because of geopolitics, because of domestic politics, also in the US and Europe over the next 6 months. But do you buy on these dips?
Absolutely. Absolutely, we're buying on any dip that we're likely to see. We think that the markets will be volatile in the next half a year, but in the next 12 months, we still see upsides to the European and the US market. And the reason for that is really the equities are in a Goldilocks right now because the central banks are cutting, but at the same time, the fundamentals remain very strong. Yes, the US economy is slowing, but it's still quite solid.
And Justina, is it still the Fed that's driving a lot of these gains? I know we're expecting, yesterday we saw a couple of data points being revised upwards for the U.S. economy, and then we have 2 data points today, including a leading indicator that the Fed looks at.
Yeah, I mean, it's been, like Nataliia said, like a really glorious kind of Goldilocks here. And, it's kind of interesting that after the 50 basis point cut, it's not just that stocks rallied to a highs. It's like, if you look at the internals of the market, I mean, it's kind of value stocks coming back and a lot of like steadier stocks kind of losing favor. And so it's like the risk appetite suddenly has been really supported by both this perception that the economy is still solid, but also that the Fed seems kind of keen to sort of get ahead of any weakness in the labor market. And so I think in that sense, people will be watching today's CPI numbers. And also personal spending and personal kind of income growth. And that will kind of give you a sign on the strength of the U.S. consumer, as well as the fact that, inflation is still slowing as kind of the Fed has been seeing.
And Nataliia, you also mentioned the marginal dollar. I mean, there are quite a lot of question marks on what the dollar does in the medium term, and that also impacts, I guess, your positions elsewhere in the world.
Yeah, we think that in the short term, we'll probably see a bit of a strengthening in the dollar. But the longer term picture is we expect dollar to continue weakening given the cuts that we're seeing from the Fed and the ECB and in general the global central banks.
Nataliia, when you say technology, I mean, apart from the data centers, is there any way of playing it to, chips or microchips? Or again, some of these stocks are also priced to perfection. And so I don't know whether it's a bit of a question mark going forward.
Data centers, absolutely semiconductors is a great way to be, but you have to be quite specific what you want to own within semiconductor. We've been quite positive on the equipment companies in Europe, in the United States, and in general the companies within the whole value chain. But we'll also think about companies in the utility space or the mining companies. Probably those are sectors that are usually a bit overlooked. Or I would say underlooked, but we think that that is definitely a sectors that we would pay attention into.
Justina, I don't know if we've actually underestimated the weakness in China and whether we should have seen a bigger fall in some of the equity prices if the Chinese economy is really as bad as maybe policymakers think.
Yeah, I mean, I think that at this stage, a lot of people are buying the dip, and you're kind of seeing a bit of that frenzy in the Chinese stock market today where there were even like glitches on the exchange. But I think that, we're still kind of waiting a lot of details on how they're going to support the property market exactly. I mean, they've said some pretty strong things, that they want the market to stop declining. But how exactly are they going to do that? And are we going to see more direct-to-consumer support? I think that's the side of it where we've always kind of seen Beijing policymakers be a little bit more kind of hesitant about. But I think at this stage, it's not that much about whether banks are willing to lend. I mean, banks would love to lend. It's about who actually wants to borrow.
Nataliia, in Europe, so we had the ECB actually saying that some of the consumer inflation expectations dipped in August. We also had a nice speech earlier in the week by Isabel Schnabel. Are you changing your view on how many cuts we could see from the ECB this year?
No, we're not. We're not changing the number of cuts at this point. And what we're watching very closely is the PMIs. So we have seen a bit of a sluggish recovery in the European economy. European composite PMIs have been on the weaker side in the last couple of months, especially Germany. If you look into Germany, manufacturing PMIs are around 40, which is the lowest in the last year. That predominantly has been driven by the auto sector, which we have been staying away. But because we're not seeing a recovery in the European market, that's why we prefer to be very specific in terms of what we want to own in Europe and currently prefer US markets over the European market.
It's extremely difficult to of course, game what the Trump presidency really means for tariffs, which seems to be the biggest policy question mark for Europe. I mean, does it automatically change also your view on European equities depending on who gets into the White House?
We think that there may be volatility coming into the election. And if you look into the European market, the market is currently trading at 13.5 times. And the market is kind of in between the China stimulus, which has been unexpected and better than market thought, which is positive. But on the other side, there are definitely election risks that are impacting the sentiment of Europe. And therefore, in our forecast, we don't see a lot of re-rating in the next year or so, just because of those risks that are waiting on the equity market.
I mean, the autumn also means a lot of budgets from a lot of European countries. And any question marks on France or some of these others and what they do with their debt?
Yeah, this has been a big issue that the market has been focusing on. We especially saw this at the beginning of summer. I think at this point, the market switched into what will happen with the earnings season, because this is the next catalyst that the market is waiting for. And we don't expect a great earnings season coming of Europe, but the expectations are just so low that we think that even if companies show good enough numbers, the market may actually take it very positively.
I love that. It can only go up. Nataliia, thank you so much for joining us. Nataliia Lipikhina from JPMorgan Private Bank, Bloomberg's Justina Lee stays with us. Coming up, Shigeru Ishiba wins the leadership race to become Japan's next prime minister. We discuss what that means for the world's third largest economy. That's next, and this is Bloomberg. Welcome back, everyone. Now, the yen has surged after Japan's ex-defense minister Shigeru Ishiba won a vote to become leader of the Liberal Democratic Party and the country's next prime minister. Well, Bloomberg's Tokyo bureau chief Isabel Reynolds joins us now. Still with us, Justina Lee, our markets reporter. Isabel, I mean, this is a wildly exciting day. It always is when there's a change of leadership in a G7 country. But Ishiba, unlike his rival, is known as a supporter of the BOJ normalizing policy. So what can we expect from him in office?
Right, yes. Well, he's said for a very long time that he thinks, we should live in a world with interest rates. We shouldn't be in this kind of zero or negative situation when it comes to the cost of money. So that's one thing we know for sure. And that's one reason why we've seen all these gyrations in the markets today, because at one point it seemed as though his rival Takaichi was going to win. And then, minutes later, everything turned around and Ishiba came through to take the final victory. Apart from that, he's been very much in favour of kind of fiscal rectitude. He's not a kind of reckless spender like some of the other people on the slate might have been expected to be. But in terms of foreign policy, he's almost something of a mystery, really. He doesn't have a lot of experience. He's never been foreign minister, and he's a very kind of domestic politician. But he has given some hints during his campaign that he would take a somewhat more kind of robust attitude towards the US in terms of creating a more equal partnership between Japan and, in fact, its only formal treaty ally.
And Isabel, I understand that he is also thinking of a kind of NATO-like Asia alliance, which could anger China.
Yes.
So is he going to be more, I guess, will there be more change on the politics, on foreign policy, or actually on domestic economy?
Right. Well, I think his focus is very much over his career actually been more focused on the domestic economy. He hails from one of Japan's sort of poorest and most elderly and smallest prefectures in a rural area of West Japan. That's the area that he represents. And he's really made it his life's work to try and sort of improve the fortunes of these relatively poor people in the outlying areas of Japan. Having said that, he has served as minister in charge of that very issue and didn't have a lot of success in smoothing that difference over. So it's unclear exactly how he would tackle it. But that's certainly one of his top priorities. In terms of the Asian NATO idea, that came up during the campaign. It was widely sort of derided by a lot of people as largely unworkable. We don't have the same kind of sort of system of shared values in Asia. There are too many differences between all the different countries, people say, to actually form that kind of broad alliance in this region.
Justina, in terms of market reaction, so of course his win has lifted yen, it also lifted yields, and I guess that's good for, investment insurance, for example.
Yeah, it's pretty interesting because obviously there isn't really explicitly a tie between the government and the BOJ, but you can kind of see signs of perhaps, some political pressure that could be possible. And I think the reason we saw such a strong reaction is because previously markets thought that perhaps that his rival was going to win, and then she was like a lot more dovish. But, with Ishiba, he's kind of said that he's generally, a bit more of a monetary hawk. He's sort of supporting the BOJ's path currently to gradually hike rates. And so I think that kind of explains the strength of the market reaction. But going forward, it's probably back to fundamentals.
Yeah, so the market reaction is less about what he'll do. It just really indicates, that Japan's economic policy will probably stay similar to what it is now, whereas his rival would have done a bigger shift.
Right, exactly. His rival has even said that, it would be stupid to raise rates now. And I think, in that case, we could have seen a bit more of a reflationary policy. I don't know, are the carry trades even coming back? But in this case, we're staying on the path here. And so I think another indication here will be kind of where is Japanese inflation going? And so we would be back to observing this.
So, Isabel, what will be the next steps in the coming days? And, what does it mean for the next elections, which need to be held within the next year or so?
Right, yes. Well, what we can expect in the next coming days is probably on Monday he'll be appointing his main party executives. On Tuesday, we're expecting, it's not entirely confirmed yet, but we're expecting a special session in Parliament to formally vote him in as Prime Minister, and then he'll name his cabinet. And that will be a very interesting process because he's always been an outsider in the LDP. He even has a history of actually leaving the party and joining the opposition at one point before coming back. So who he will find as his close friends in the party is quite an interesting point. So it will be a fascinating day, I think, on Tuesday to see what happens.
So, Isabel, does he really start kind of thinking about the election, and will that form policy?
Yes, that certainly will be a factor in it. The election, as you say, has to be held within the next year. It's been a kind of custom for the incoming leader to actually hold an election pretty rapidly after winning the leadership of the party. Usually you get quite a big boost in the polls at that point, which is very useful, obviously, in the election. So he will be looking very much into that, perhaps bringing in some of his more popular rivals as in prominent positions to help him along with that campaign.
Isabel Reynolds, thank you so much. Our Tokyo bureau chief and Bloomberg's Justina Lee looking at the markets. Now, coming up, a first encounter for the new Commerzbank chief executive and her UniCredit rival. We look at what's at stake next. Well, Commerzbank's management is set to meet with UniCredit today, the first encounter since the Italian bank started building a major stake in the German lender earlier this month. Now let's get more from Bloomberg's Oliver Crook in Berlin. So, Ollie, a roller coaster of a week. Where do things stand as it comes to an end?
Yeah, Francine, it began with that sort of surprise that Odile had actually taken additional position, 21% of the bank, and it closes with the first meeting between UniCredit and Commerzbank since this saga began. We should also say that both Odile and Orlop were at this Bank of America conference where they were each giving kind of their views of what the future of this bank should be. And Orlop yesterday really laid it out. She wants to increase profitability. She wants to boost the payouts to investors. And the board has backed her and has backed Commerzbank independence. Now, in terms of what comes into this meeting where the two banks meeting, it's a virtual meeting. We don't know if Orlop and Odile will be there in person, but it begins at least the beginning of a conversation that is not going away. Even if it isn't a full takeover, UniCredit now has a 21% stake potentially if they get the approval of this bank. This is a relationship that they're going to have going forward. Of course, some of the Italian officials have weighed in. They're in favor of it. The Germans are still resistant. Francine, I should say that right outside of the office in front of the Brandenburg Gate, there are two flags flying. It's the Italian and the German because Nataliia is actually in Berlin right now. He'll meet with Scholz. I wonder how awkward that'll be.
Awkward, or maybe not awkward. What are the odds of a deal actually happening?
Yeah, so listen, it depends who you ask, but at the end of the day, you need to imagine what it feels like to be a Commerzbank shareholder. Many of them have been long suffering. We've done a 30% rally in 2 weeks. If you switch up the board and you look at sort of how investors have been treated under Odile versus how they've been treated in UniCredit historically, in terms of how much money is flowing back, you put in and you get back out. I mean, at 6% for Commerzbank, 21%. These are the kinds of comparisons that Odile is going to make in his case to shareholders, and that's really sort of going to be fundamental in determining the fate of Commerzbank. As far as the sort of analyst commentary is concerned, Citi sees a 70% chance of this deal coming through and ending in a takeover with a 10% premium. That is the sort of view from Citi on the street, and we're going to hear a lot more of this kind of commentary as time goes on, as these conversations evolve. But, you know, this is going to be the first touch point, and again, this is going to be absolutely crucial, this meeting today, in determining the fate of this bank.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, China's stimulus has pulled European luxury stocks higher. Bloomberg Intelligence says firms in the sector can now surpass revenue growth estimates in the second half of the year. Now, Moncler also jumping on news that LVMH is investing in the company and giving the French luxury conglomerate a seat on the Italian company's board. Coming up, the Ukraine President Zelensky is expected at Trump Tower in the coming hours. We'll discuss that meeting next. And this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Risk appetite across financial markets get another boost from Beijing's latest stimulus measures and upbeat U.S. momentum, while China's stock market erases losses for the year. The yen surges as Japan's ruling party picks Shigeru Ishiba as its next leader, choosing a backer of the BOJ's policy path instead of a candidate who opposed rate hikes. Plus, Donald Trump says he'll meet with Volodymyr Zelenskiy today after stepping up his criticism of the Ukrainian president in recent days. Well, we'll discuss support for Kyiv in an exclusive interview with the president of the European Bank for Reconstruction and Development in just a moment. Now, a couple of breaking news. We've had quite a lot of M&A. I'm not only thinking about the banking story, which we just covered between UniCredit and, of course, Commerzbank, but REA making a fourth offer for Rightmove. Remember, the last one was rejected. This new offer is at an implied price of 775 pence per share. I don't think the markets really believe it, because if you look at Rightmove, it's at 664, and it's actually down. But it's interesting that the value for Rightmove is now about £6.2 billion. The proposal for Rightmove is 11% higher than the initial bid. I'm not sure it's going anywhere, because usually there's a big market reaction when there's such a bigger price increase. But I could be wrong, so of course we'll follow the very latest on Rightmove and REA. Now back to our top story, and Donald Trump and Volodymyr Zelenskiy will come face to face after trading insults this week. Now the Ukrainian president is expected at Trump Tower in New York later this morning. Now Trump's presidential rival Kamala Harris met Zelensky on Thursday. The vice president describes Trump's call for negotiations with Vladimir Putin as a proposal for surrender. Well, I'm joined by Bloomberg's Stephanie Baker, whose book, Punishing Putin, was also published this month. So, Stephanie, congratulations on the book. It's a great read. It goes through basically how Vladimir Putin really put the economy first so that any sanctions, once the invasion of Ukraine happened, would be almost safeguarded. What do you make? I mean, it's incredible that Trump is meeting with Zelensky at Trump Tower on his own turf.
Yeah, it's a really high-stakes meeting for Ukraine and Zelensky. Remember, yesterday, reports were that the meeting was off. It seems like Trump has had a change of heart. And Zelensky has a tough job of convincing Trump that continued financial and military aid to Ukraine is in the interests of the U.S. and that Putin has not given up on his goals of controlling all of Ukraine. Yesterday, Biden announced this $8 billion aid package for Ukraine, which will last until the end of the year. But 2025, Ukraine is facing a financial crunch and needs continued U.S. support.
I mean, it's not only the U.S., actually, right, that may not be able to give Ukraine more support. Some countries are saying, look, they just don't have the money, and it's getting politically more difficult.
Right, exactly. And so that's part of what I cover in my book is the need to look at using immobilized Russian assets to help Ukraine. There is, I think, a tiring amongst Western taxpayers of continuing to fund this war, but there is a pot of money available in the form of Russian central bank assets that have been that were immobilized in the first few days of the war. And my book goes into that, both the decision to freeze those reserves as well as the debate about how to use them now. And there is work being done on that that's run into a lot of troubles. But I think that there'll be increased pressure on actually trying to go after using the whole pot of money, this $300 billion pot of money of Russia's central bank reserves that were immobilized in the West.
And Stephanie, you're also a great student of U.S. politics. How's this playing out in the U.S. election?
I think it is really important because if you go off of what Trump has said, he wants to end the war in a day, which he hasn't spelled out how he's going to do that, but it does look like the only way to do that is to cede territory to Russia, call a ceasefire, and probably offer Putin some kind of at least limited sanctions relief. I don't see how Putin would agree to do that. And that's another thing I go into my book, is that this is a really high-stakes election for Ukraine and for Europe as a whole, because if Ukraine loses this war, that has global ramifications.
So Russian attacks on Ukraine's power stations are also taking their toll, forcing Kyiv to rely on more expensive energy imports. Now, damage to Ukraine's critical energy infrastructure is estimated to have caused a loss of more than 9,000 megawatts of generating capacity. Now, to that end, the European Bank for Reconstruction and Development is providing more than 700 million euros in financing to hack up Ukraine's energy supplies. Now, the EBRD has also lowered its estimate for Ukraine's economic growth to 4.7% next year, down from the 6% forecast in May. Well, with me now is the EBRD's president, Odile Renaud-Basso. President, thank you so much for joining us. I mean, this is critical. And actually, Stephanie said it perfectly. This is a critical year for Ukraine, but not only for Ukraine, really for the rest of Europe.
Yes, I fully agree that continuing to support Ukraine is absolutely fundamental for Europe's security over the long term. And I think that Europe is fully aware of that. So there is some strong commitment to finance Ukraine for the next year, also for 2025, so as to enable the country to continue to defend itself.
Madam President, I mean, the EBRD is supporting this decentralized energy production in Ukraine. One of our columnists, Mark Champion, was also writing, look, you know, Vladimir Putin is threatening nuclear wars, but actually what he could do much easier is go after the energy production.
Yes, indeed. And we've seen that already in the first year of the war, where Russia attacked the energy network, electricity network, and so forth. And we managed, and the Ukrainians managed to rebuild and to reconstruct so as to keep electricity flowing. Now the issue is more on electricity generation, and it's a big challenge for the next winter because it needed to have a huge impact on heating, functioning of manufacturing, access to electricity. And when I was in Kiev, for example, in June, it was only in summer, electricity shortage where, I mean, every day you had a few hours without electricity. So if it happens in the winter at a very cold time and so forth, this could be very challenging. So what we are doing is really to find every ways to support decentralized energy generation, which is less fragile for attack, because more decentralized. And so that's why we put in place this credit line for financing businesses through banks to buy generators, gas generation capacities. But we are also working with the public sector infrastructure, so public companies to work, I mean, like the railway company, electricity network company, and municipalities, because a lot of things can be done also through district heating system and so forth. So we finance more than 1 billion up to now on electricity, on energy.
But, Madam President, so, I mean, part of the report also talks about how much revenue Russia is getting from oil. And so there are question marks on whether the G7 price cap is actually working.
I mean, the issue, it has worked in the sense that there has been a big shift, but other countries are buying. So the demand has shifted from European countries or Western countries to other countries that have stepped up in terms of India, for example, is buying much more energy and oil from, and China, India and China, much more from Russia. So this shift has reduced the effectiveness of this instrument.
And Stephanie, going back to your book, I mean, this is all concerted, right? Was this the plan of Vladimir Putin all along? It's kind of changed the economy before invading Ukraine.
Well, what he did was profit from the war he started because oil prices jumped in the wake of his invasion, and that enabled him to continue to finance the war even after the G7 froze Russia's central bank reserves. So I think the price cap, it's true, it has had a number of problems. It hasn't been properly enforced. They've stepped up enforcement and then stopped, stepped up enforcement and then stopped. The US, UK, and Europe have sanctioned something like 65 tankers, probably maybe more at this point. And I think that they may have more room to do that, to start enforcing that price cap. Now that oil prices are coming down globally, there's more room to do that without pushing up inflation and energy prices worldwide.
Madam President, I mean, you know, Russia's interest rates are at 19%. How do you view the Russian economy now, given, you know, the war spending, higher interest rates, but also the sanctions?
So it has been quite resilient, I think more resilient than expected in the first years of the war. What we see now is, however, a lot of vulnerabilities. Huge, I mean, tendency of overeating due to human capital shortages, people being mobilized, a lot of focus on military manufacturing and so forth. So the situation is not so great, and the interest rates remain very high. Have been increased from 19 to 20% because of inflation quite high also. So there are underlying risks. So the capacities for Russia economically to continue the war is not obvious, and it's costly for Russia also.
President Zelensky is really almost on a world tour to try and, I guess, remind politicians, but also citizens about what his country is going through. Do you worry that we're at a juncture where, if not abandoned, interest in Ukraine could severely wane in terms of financing?
I think Ukraine and President Zelensky have done a great job in keeping the focus on Ukraine. Of course, it's very challenging. You have other wars. The situation in Lebanon is also focusing a lot of attention. So it's very important to keep that interest and to ensure that people in Europe, in the West, understand that this is vital for them in the long term. So I think that we've seen a continued high level of support. EU has already, as I was saying, they are find a way to mobilize the asset with the revenue generated by the frozen asset to finance budget support for Ukraine next year. We've got a capital increase in order to be able to continue to support Ukraine. So we see a lot of effort, but it's important to keep that going, because if the economy, if the budget is not financed, the country will not be able to defend itself.
When do we start talking about reconstruction? It's still an active war. And how much money is then needed for reconstruction, given we don't know how much damage will be at the end of the war? And who will stand firm with the EBRD?
I think what's important is that we are already reconstructing, because key infrastructures are destroyed, and we are financing the reconstruction already now. We have invested 4.8 billion in Ukraine since the beginning of the war, so much more than what we would do in normal times. When reconstruction peace comes and the war is over, then more investment and more private sector investment will come, because I think that the challenge now is to attract private investors in an uncertain situation.
Stephanie, what do you think Trump and Zelensky tell each other in the gold elevator of Trump Towers in New York?
Oh, that's the million-dollar question. I'd love to know. Zelensky had a call with him a couple months ago, and Zelensky described the call as in very positive terms, saying that Trump was supportive. But the words that have been coming out of his mouth more recently have been very critical of Ukraine. He called him the greatest salesman. Every time he comes to the U.S., he walks away with a check. So I think he's going to have to turn on his charm offensive and really try to persuade Trump that Putin remains a danger and that he should be not only increasing military aid, but widening and strengthening the sanctions regime. In the book, I do show how Trump was quite skeptical of sanctions during his first term, and that the U.S. sanctions that were rolled out during that period were done mostly from pressure from Congress or his hawkish national security advisors. So I think it remains to be seen, if he does win another term, how he'll approach Russia and Ukraine.
Well, thank you for a terrific briefing. Odile Renaud-Basso, president of the EBRD, of course, with a wonderful, important report out on Ukraine, and our very own Stephanie Baker with her book out this week, Punishing Putin. Now, coming up, how companies should be preparing for AI and the future of work. We discuss all of this with Tanuj Kapilashrami, the Chief Strategy and Talent Officer at StanChart. That's next, and this is Bloomberg. The rapid and disruptive effects of AI, climate change, and geopolitical uncertainty are having profound impacts on the future of work. Now, it's the focus of a new book out next week called Skills-Powered Organization: The Journey to the Next Generation Enterprise. Now, it's co-authored by Tanuj Kapilashrami, Chief Strategy and Talent Officer at StanChart, part of the Chief Executive Bill Winter's management team, and she joins me now. Tanuj, thank you so much for joining us. Congratulations on an important book. I know a lot of chief executive and the executive team want to get their hands on it because we don't really know what happens to the workforce. What was the most surprising thing you learned in doing research?
Well, one of the most surprising things for me is how rapidly workforce is getting disrupted with emerging technologies like Gen AI. I finished writing this book a year ago. If I had to write it today, the first chapter would perhaps look a bit different than it did a year ago, just because of the rapid disruption that's happening in organizations today.
But is this job losses or actually job changes? So do we still need the staff, but we ask them to have different talents?
Well, I think the human-AI collaboration is the next big transformative work pattern, and that's happening today. The question is not, are humans going to lose their jobs to AI? Yeah. It's how are humans going to work with AI to augment productivity, to augment innovation, creativity. And I think that's the really big transformation that is happening in the workplaces.
I mean, again, not all sectors are born equal, not all jobs. What will be the industry that will be disrupted the most?
Well, I think it's going to be across the board, Francine. And I know a lot of people refer to this wave of change as something they have seen before. You know, a lot of people tell me, oh, you know, we saw automation, we saw digitization. But actually, the level of disruption that's happening in highly skilled jobs is something most businesses have never experienced before. So, you know, this is not what we traditionally call low-skilled jobs that are getting disrupted. These are really highly skilled jobs that are getting disrupted. And one of the things we talk about in the book quite a bit, and the work that we are doing in StanChart, is jobs being as a currency of work, which was a product of Second Industrial Revolution, is not going to be relevant anymore. You know, skills are going to become a currency of work. And how do businesses build operating models where work flows to skills as opposed to traditional jobs is going to be the real opportunity if you are going to make the most of emerging technologies, AI, Gen AI, LLMs, etc.
And that, of course, changes the recruiting process as well. But, you know, there's a number of really sci-fi ideas in the book, which I'm really fascinated by. Would any of these actually ever get implemented? Like, you talk about holographic water coolers.
Well, I mean, you know, when hybrid working happened a couple of years ago, I remember saying to somebody, we kept talking about future of work. We are in the future of work, right? And a lot of conversations at that point in time was how do we recreate water cooler moments when people are working virtually? And there's been a huge amount of innovation that's happened in that space. You know, the idea of collaborating when not everyone is in the same place. So I think the level of innovation that is happening with the advent of technology is incredibly impressive. I mean, some of the things that we are doing is we are doing the idea of skills passport. We are using Gen AI to seamlessly match demand and supply of skills to flow talent in areas of biggest opportunity and stuff that's not constrained by job descriptions or titles. So there is a huge amount of innovation happening and actually a massive opportunity to innovate even further.
But, Tanuj, how far do you think this will go? I mean, will one day AI send, like, avatars of chief executives to meetings?
Well, I mean, I'm very strongly of the view that this is not about machines replacing humans. It's about machines augmenting human capability, right? Somebody said to me a few weeks ago, and it's really stuck with me, somebody said it's not about whether I'm going to be competing with the machine. I'm going to be competing with somebody who uses the machine. Okay. So the ability of workers to intuitively work with AI is going to be a skill that each one of us are going to have to acquire very quickly, and that includes chief executives.
So, again, what does that mean in terms of geographies where, you know, companies are hiring from? Does that change, or are there parts of the world that are going to be much more skilled in these kind of new technologies and how you operate them?
Well, I mean, look, there is a danger with AI that this is going to increase the divide in labor markets even significantly. You know, people who are able to upskill in technologies and people who are not. So there is a real danger that it increases the divide in the world. I think, Francine, that is where there is a massive opportunity for businesses, policymakers, education institutions to come together to really start focusing on how to bridge this gap between education and employability. And actually, what is the role of business in bridging that gap? Because the skills that are going to be needed in the world of work, which is both technical, which is digital data using, but also human skills, you know, because there are things the machine cannot do. Resilience, managing ambiguity, a very different type of leadership, ethical, moral leadership. That's the focus on human skills along with technical skills that's going to become really important. And I think the role of businesses to partner with policymakers in bridging this gap between education and employability is going to be critical to bridge that gap in the world in terms of labor movements.
But, Tanuj, I mean, I guess a devil's advocate would say, well, we need to use this technology much more radically. At the moment, we're tinkering at the edges, making the human more productive. What if we, you know, in certain parts just got rid of the human?
Well, I mean, there are areas where I think the need for humans is going to reduce. But actually, there's very little evidence we have. I mean, even if you look at some of the examples that are coming out of use of ChatGPT, where human interaction has been eliminated completely. So, I mean, the way we see it is you are deconstructing jobs and there are going to be tasks which are going to not need human intervention at all. But then that means humans get an opportunity to free up to focus on the tasks where actually only humans can add value. I mean, I keep saying as machines get better at being machines, humans can get better at being humans. And so to me, it's going to be the deconstruction of jobs into tasks, which is going to be the big transformation opportunity.
What does it mean for a bank like Standard Chartered in terms of where you're hiring and focusing technology on?
Well, what it means for Standard Chartered is that we have started thinking about build, buy, borrow choices when we are looking at recruitment very carefully. We are saying that they are skills, not jobs, where we need to buy externally. They are loads that we can build internally, reskill, upskill our colleagues, both on emerging technologies, but also new ways of engaging with technologies. And there are opportunities for us to borrow. We are talking a lot about creating internal talent marketplaces, a gig economy internally where we can borrow skills from people in another part of the organization that already exists. So this idea of it's not just external recruiting, but really thinking about building, buying, borrowing of skills in a seamless way to get the job done.
Tanuj, thank you so much for joining us today. That was Tanuj Kapilashrami, Chief Strategy and Talent Officer at Standard Chartered. Plenty more to come, and this is Bloomberg.
Antarctica is experiencing warming at twice the rate of the global average. And of course, Antarctica, key, of course, to a number of incredibly important species, but also the effects of warming in Antarctica will impact on all of us. The climate transition is a cost of living issue. And alongside that, surveys have shown that actually generally the public want their governments to act on climate change.
Now, that was the former Prime Minister of New Zealand, Jacinda Ardern, speaking to us earlier this week at the Earthshot Prize Innovation Summit organized by Bloomberg Philanthropies in New York. Now, ByteDance, the Chinese owner of TikTok, is set to sign a $10.8 billion loan in what would be the largest ever dollar-denominated corporate facility in Asia ex-Japan. That's according to people familiar with the matter. Now let's recap one of the top stories out of Japan. And the yen reversed losses and surged against the dollar, while Japanese stock futures fell after former Defense Minister Ishiba won the leadership of the nation's ruling party. This is Bloomberg.